or part of the framework of the Memorandum of Understanding is that Iran can license their oil to sell to U.S. companies in dollars, U.S. dollars. So the petrodollar is trying to be strengthened. I think the dollar caught a bid. Hey, it's KP coming to you live from Corona, California. And today is the first official day of summer. It is the summer solstice that just happened this past weekend, yesterday. As my kids like to call it, Trollstice. For anyone that has watched the Trolls series, very good movie. Unfortunately, the first day of summer didn't start off so hot. We lost Alan Greenspan, 100 years old, pretty awesome. 5-term Fed chair, and 18 and a half years at the helm. Pretty incredible. So a lot of what we talk about here together in this community, when you comment down below, is the flow of money, economics, macro stuff. What does the price of oil have to do with the price of tea in China, right? And, we get into all that, how it impacts mortgage rates and our business and how we're thinking, and we discuss business in general. And so I think Alan Greenspan definitely shaped a lot of what we see today. And like any person, an imperfect human being, we all have our flaws. But I'd say overall, generally did an incredible job. And I think the only thing people give him grief for is that every single Wall Street investor that created collateralized debt obligations and synthetic tranches in different kinds of investment vehicles that were layered with loans that we thought were good at the time, that we all did, by the way, that was in the business and made a lot of money. And ultimately, it went bad. So somehow he's supposed to bear all that? I don't think so. So anyway, overall, great guy and fantastic run. And, irrational exuberance. Does it exist today? Is there froth in the AI market? It's okay to be exuberant, but is it irrational? And how does that have to do with, what does it got to do with rates? So rest in peace, Alan Greenspan. We'll move forward and watch Fed Chair Warsh and see how he does in your honor. So also on the first day of Trollstice, or after Trollstice, was the Road Act. It passed the Senate, which means by the end of the week, it'll go to the House and hopefully pass by the end of the week, and maybe to the president's desk to be signed. Could you imagine him doing something on July 4th, our 250th anniversary, birthday celebration, however you want to say it, of America? And notice I got the American PRMG logo. Pretty cool. Shout out to Paul Lucido and Paul Rosa, our CEO, for putting these together. But pretty incredible to see another piece of housing legislation passed. And I know the NBA and so many other groups. I mean, obviously, NAM, BAC, so many different groups were part of this, going up to Washington, D.C. and lobbying. And so that's a big win. It's like the first piece of housing legislation passed in like 30 years. What does it mean to us? It really impacts the supply side. So, demand is there, and we know we're undersupplied, and we know demand can ramp up in a heartbeat if rates move around, if we get fair weather for an extended period of time, bringing insurance down. So the supply side was really impacted. So it'll be interesting to see how it all plays out, but it's moving the ball forward before the midterms, before we have potentially real gridlock in D.C. So that's a good thing to note. And of course, on our weekly MBA, Mortgage Banker Association call, we went over this and some other legislation. If I have time here, I'll get into that. Let's talk about the Fed, oil prices, the bond market, why there's a dislocation. Usually oil prices go down, and then so do the 10-year Treasury, and the rates get better. And that's not happening. And so if you've been watching my last couple videos, I basically put it like this. Oil is energy, right? And energy is volatile. And so when you have this personal consumption expenditure coming out on Thursday, the Fed deflator, which is the old data, not Fed Warsh's new data that there's a task force for, and we'll get out to that. I can't wait to see it, actually. But oil and energy prices are volatile. So we're at $74, I think even $73 last time I checked, pricing for August oil, okay? So we were, above 100, spiked, for a hot second there for West Texas Intermediate. And now we're down to 73, 74 bucks. We were like 65 before the conflict started. So gas prices should start to come down, but it could spike back up. The Strait, remember, like we talked about, it's not open close, right? There's been ships going through, but just a little bit. But now there's more going through. And then today, a deal passed. A part of the framework of the memorandum of understanding is that Iran can license their oil to sell to U.S. companies in dollars, U.S. dollars. So the petrodollar is trying to be strengthened. I think the dollar caught a bid. And so we'll see how it all plays out. But typically, when oil prices go down, the bond prices will improve, and they haven't. And that dislocation, in my opinion, is this kind of a wait-and-see approach. The new Fed chairs always get tested. There's a hawkish stance from the board, and they're only hawkish recently because of oil and persistent inflation, which oil can trickle its way through to being more long-term inflation with input prices. Diesel, we've talked a lot about on this, raising the cost of everything. Remember fertilizer costs, we don't know how that's going to play out. Urea, all these things that are produced in the Middle East that we still don't have enough data. So I think the Fed's wait-and-see approach is basically mirroring what the bond market's approach is of waiting and seeing. They don't want to give us lower rates because they're not sure yet. Now, we have some Fed Treasury auctions this week, and so we'll be selling Treasuries to make sure we can fund our government that spends more than it takes in, but then we're trying to grow rate out of it to take in more on tax revenue, and then everyone will be prosperous. We know that the job market is pretty much in balance right now, which the Fed said so. And so they're really just focused on the inflation part of their mandate, according to their board, of course, which again, that all just started a lot recently because of this Iranian conflict. So how much of it is going to stay sticky? Most geopolitical conflicts kind of just comes and goes. So is this $75 and under oil price, is it foretelling, and is it leading the Treasury market and or the Fed? I don't know. Just something to think about. Some things I didn't touch last week, just real quick, go through some quick notes, and I got some cool little nuggets here for you. The Fed that said, last week, we recognized over 5 years above the 2% target inflation, this committee will deliver price stability. All their language and everything, a bit shorter, simpler, just gives the facts and without forward guidance. But I think if they use more real-time data, like I said on my last video, that is like forward guidance, using more sources other than just the traditional surveys, which I think are terrible. So what the last SEP, Summary of Economic Projections, said, the dot plot, 2.2% GDP, 3.6% on the PCE. The estimate for monthly rise this week, according to Fundstrat and Tom Lee, who I subscribe to his data, is 0.34. So it would be a 0.3 rise on the core PCE. Fed said 3.6 by the end of the year, 4.3 unemployment. So that means employment's going to be stable the rest of the year. 3.8 is the Fed's target this year, and 3.6 next year. That could come down to 3.6 and get rid of all these rate hike, this talk that's going on in the moment because oil is up and inflation is up. If the stock market doesn't keep rocketing, some of these figures like, stock commissions for, your normal person doesn't have stock and pay some advisor stock fees. And that makes its way into some of our inflation readings. So, Truflation under 2%. I'm not saying it's the gold standard. It's another data point. And so it'll be interesting to see how that plays out. I think the investors seeing the odds of a rate hike, there's one more component to that. Remember, the third mandate is, basically long-term Treasury prices, right? The 30-year long bond, which has been, up 5% or higher. The UK just raised rates. Japan has and may do some more. And if you remember, this is not a conspiracy theory, but I've talked about it over the years, and it's time to remind everyone, that third mandate, we have to make our bonds attractive to compete for those dollars that pay for British gilts or Japanese yen or any other Treasury instrument around the world. So we could raise rates just to sell more because we have to sell more because we spend more than we take in. So there is that component to it, and the Fed has to think about it, and they will dress it up as we're fighting inflation as long as employment is stable. So just one more thing to think about. Condominium market the condominium market represents roughly 10% of the overall housing market. I was shocked it was that much. And now this is just a nugget I read out there. Millennials driving demand accounting for 45% of the condo mortgage applications in the first half of 2025. So I get that's a little bit dated. I do like that the FHA and VA have indicated they will not align with the GSEs, Fannie and Freddie, by increasing required reserve allocations from condominium projects from 10 to 15%, which would make condos more affordable. You know, condos have been a source of affordable housing. It is a start. My first place I still own in 2001, I bought, Olin and 183, and I still have it rented out in Austin, Texas, and it was a condo because it was affordable for me to get into. And so the fact that it's so much harder to get into it, the limited review going away, I think is kind of a bad idea. Hopefully some of that gets changed, but I get it. It's also when there's a housing bust, it's just the first product that gets let go, as we saw in South Florida, which I was there and I lived it, and I might have been a little bit part of that. I apologize in advance. The Colorado law, on new artificial intelligence, they kind of walk back their law. So at the California MBA and then of course the National MBA, this has been on their radar. If you have AI and you're using and taking data from our state's constituents, you have to show us how you use it. That could go so far as Fannie and Freddie showing their algorithms in DU and LP. Could you imagine that? So this law, which didn't go that far and then got kind of redone, walked that back in Colorado. So I think the states are starting to say, we're going to do some reviews if there's anything wrong, and just show some consumer disclosures and some transparency, but not going so far as to dig in. Now, of course, that doesn't mean other states can't do weird stuff in the future, which would make a lot of what we do in AI governance really tough to manage on a state-by-state level. So we'll work on that, but we'll take that as a win in Colorado, and of course the win for the Road Act. And the days will only get shorter from here. Will we have a kerfuffle in August, July and August, like the French Revolution or any other revolution where people got hot in the summer and were pissed off because they're paying too much for all the stuff before the midterms? But you know what? It's World Cup, so let's just go back and enjoy it. I think there's a game going on right now. It's 9:45. Maybe I'll tap in while I upload this video. Catch you Thursday from the Mortgage Mastermind in Vegas, and I will also be with Capacity tomorrow at Customer Contact Week in Vegas. A double doozer. Cheers.
Hey, it's KP coming to you live from Las Vegas. We're at Circa Casino. And they have a thing called Stadium Swim. Got a little cabana here. PRMG is representing, hosting some of our people and the industry. We're watching the U.S. soccer game. It's halftime. We're not doing so hot against Turkey. It's 2-1 down. But we're wrapping up the Mortgage Mastermind, which has been phenomenal. Let me get out of this noise, get you a little better. Here's the gorilla. Let's go. Stephanie. Dan's got his shirt back on. Emmanuel St. Germain. Brian, let's go. The Mortgage Mastermind has been actually really good. Hearing Barry Habib speak yesterday, he's amazing. I had a panel myself, an executive panel. It's pretty good. And Barry moderated a panel today. So many good speakers. Ryan McDonald, one of our branch managers, had the stage solo for a little bit. It was pretty awesome. Getting your mindset right, getting your discipline right, getting your daily activities right. I'm about to go to a place where it's not as noisy. So here you go. Typical Vegas. But not only is the Mortgage Mastermind going on, which they are at Bellagio for the next 3 years, which is fantastic. But they also have Customer Contact Week is going on right now. So Customer Contact Week, I was invited by Capacity, as you guys may know, fantastic company. Used to be called Jane.ai. We've been on it for over 6 years, and they're an answer engine company for us. They offer voice, they offer texting, they offer all kinds of stuff. This Customer Contact Week was at the Las Vegas, it's called the Forum, Caesars Forum. It's actually not connected to Caesars. Huge conference. Like all these AI companies that are there that no one at Mortgage knows about. So I was snooping around, checking things out, just kind of poking my nose around, make sure that, we're on the right track in our industry. So it was pretty good. So kind of twofer. Okay, so PCE came out today, personal consumption expenditure. less than feared, only 0.4 on the headline, so 4.1% instead of 0.5. That includes energy, which we know is volatile. But oil has gotten down to $72 a barrel. I don't know if it stays there, but you can see where the industry wants to go. You can see where oil price wants to go, and if that energy comes down, then so will that headline number. The core number, excluding food and energy, I believe was at 3.3%. It was only up 0.3% month over month. So inflation is still not at the 2% target, but you can see that like it's not rising endlessly. So we'll watch how this Iran conflict goes, and if it ends at some point, we'll continue to see rates come down. We'll see mortgage interest rates improve because of 10-year Treasury. The 10-year Treasury yield has been under 440 for 2 days. Nobody saw that when it was pushing 460 plus. So a little improvement in rates. We noticed in our locks. Locks are up this week, a little bit last week. So it's a positive side. We're not anchoring our mindset to it, but those are good things. So we'll keep an eye on that. The Road Act did not get signed by President Trump because he wants to use that as bait to get Congress to act before they go into the July 4th recession and recess, if you will, to sign this Voter Rights Act. Doesn't matter. It's going to go into law in 10 days anyway. So there's all this kerfuffle on LinkedIn and everyone making a big deal of it. Doesn't matter. It's going into law no matter what. So, he's just trying to use it as negotiation tactic to get other stuff. Now that you have a bill passed, which is hard to do in Congress, shout out to the NBA and all the other organizations, Broker Action Coalition, NAM, many other ones, leading the way and making sure that we have our first housing legislation in like 30 plus years. So that was a pretty good one, I thought. Bank stress test. The Fed conducted a bank stress test on 32 banks. 20% housing decline, 30% drop in defaults. They all passed the tests, flying colors, lots of liquidity. Stock market took a little break, and the dollar's getting stronger. That's kind of a wrecking ball, the stock markets, especially for companies that are multinational. If the dollar gets strong, other foreign currencies are weak. So if you're Apple and you sell iPhones all over the world, you may take a little breather. So we'll keep an eye on that stuff. There's a lot going on. Fantastic, just a fantastic week for data, in my opinion. Rates are trending in a good spot. All right, one last look at this craziness. Go USA. We're not playing our starters. They all got yellow cards. Hopefully they don't mail it in. Oh, there's the big guy. There's the big guy. Have a good one. We'll get back to you next week from my desk in Corona. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.